Welcome back, y'all, to the channel. Thank you guys for stopping by. And today we're going to talk about trading Tesla earnings in a small account. So let's get right into it. Just a disclaimer, trading options, trading stocks, very risky. Only trade what you are able to spend and what you're willing to lose. Um, Not all the time are you always going to win on something, but just always realizing that trading is definitely risky. So, with that being said, going into the platform, this is Tastyworks. That's what I'm using to do my options, futures, and stock buying. They have low commissions. Definitely check them out in the link below. But here we go, Tesla. So, um, with Tesla, Um, I definitely love Tesla for the things that they're doing. I'm not a complete fanboy, but I do like the innovation that comes through with Tesla. Besides that, I'm not really a person that does too much fundamentals. But if we do take a look real quick, and I'll just show you guys this. Um, this is just, I had just pulled this up real quick. This is the revenue and growth of Tesla um, over, years of them being traded on the public market. So just taking a look at this, you can see that their revenue growth continues to grow year after year after year. And so, I mean, I can only imagine that they're probably going to have good news or semi good news for their earnings that are coming up. So, um, with that being said, let's take a look and see what we can do now. Um, this is Tesla from last Friday's closing price. Closed at 846.64. Didn't really do too much moving, but when we're in a small account, we have to make sure because you're being handcuffed in a sense with capital restrictions. You want to be able to still have market awareness and still be able to um, being able to be in the play, in a sense to still, you know, do something in Tesla instead of just buying a few shares and then just hoping for it to just keep grinding up higher. So the first thing I like to do is take a look at the option chain and see what's going on. We can tell that volatility in just the front month is pretty high, and it does decrease in the back months of this option chain. So, but let's take a look. I'm more comfortable doing the monthlies than I am doing weeklies. Just because, as you can see, there's a ton of open interest in these options here. So the first thing I like to do is see if there's any type of skew, and you can kind of tell because if we take a look at the 20 delta and on the put side, and then take a look at the call side 20 delta, you can see that there is a lot of call skew here. So there's a lot of upside risk. So you could essentially just, you know, make it into an iron condor. uh $10 wide, and you're basically putting up $630 for a max profit of 370, which is kind of like your 2-for-1 risk ratio. Um, but because Tesla does have really big moves, doing an iron condor may not be the best bet because we can't really tell if it's going to stay within your range. Um, and that's pretty hard to tell. So, to avoid those types of risks, there's a few things I like to do. First, I want to just show you what the put spread is going to look like. And again, these are from the closing price of last Friday. But if we just did the 730, sold the 730 put, buy the 720 call, I'm sorry, put, we're looking at putting up $767 for a profit of $233. This is the safest move, but as you guys know, if you don't already know, and I'm sorry guys, I didn't mean to do this. I forgot to show the screen. Sorry about that. Um, that puts move very slow. So they don't accelerate as fast as calls do. So taking a look at this, I mean, you're risking way more. Definitely 5 to 1 almost on this, and it's kind of ridiculous on that one. So even though your pop is 74, again, it's just the probabilities of it touching 730 is definitely, your 74%. Um, so or the inverse of that, which is your extrinsic value of that is, close to 30% it touching. So, but we can also see that if we were to do the call side and do those same strikes, or let's do the 740, selling the 740 on the call side and buying the 730 on the call side, um, you can see that you're doing the same thing. You're risking a lot to make a little, and that's just because you're trying to be a little bit out of the money. Just because you don't know how Tesla's gonna move. I'm sure if you move these in, if you move those in a little bit, your risk to reward gets a little bit better. Um, but with Tesla, I just can't trust those swings a lot. So I usually stick with a broken wing butterfly. I love it because it helps a little bit in terms of the risk defined on this trade. So we can look at selling two 725 puts, uh, buying the 730 put, and going at least $15 wide, and doing the 715 put. So if we look at that, that makes it into an broken wing butterfly. And as you can see, we're only putting up $400. We're kind of close to where the expected moves are going to be. So in in the 26 days, the February 19th back month of the options for Tesla, you can see that the expected move is $132. So we're kind of close to that, right above the expected move on there, and I'm okay with that. Because we're also collecting $1 on this, which means if Tesla moves, $20, I mean, we can take out 20% on this. Um, Usually you're not really trying to get 50% max profit on this, but this is kind of my go-to strategy, especially for earnings on a big stock like this. And if we take a look at the analyze page real quick, you can see why. As you can see, this was a closing price. But if Tesla just continues to run up, that's perfect. I mean, we can definitely take some money out of here. Um, and so I'm okay with that. If Tesla decides to drop, you have 29 days. And if it continues to drop, um, let's magnify this out real quick here. As you can see, the P&L, the profit and loss on this at expiration is pretty high, and that's just because you have these two. You basically have um these puts that are offsetting your short put, and that's what's offsetting that, which makes your P&L at expiration, if it expires within this triangle here, you can be looking at like, oh, the expiration is showing you $600, but honestly, depending on how options move and the pricings of them, you can probably take a good, again, 20-30% out of that, and that'll give you like 200-300 bucks. So, but this is what I would do. Actually, that is what I'm going to do in Tesla. Um, when the market opens up on Monday morning, and this is one of my safe bets. Again, there's so many different ways you can be very creative with being in Tesla, especially again if you're just bullish. I just showed you bullish ones. I mean, if you're obviously with an Ivy rank of 15, usually if you're premium selling, you want that a little bit higher. Um, but if you were definitely bearish in here, you can definitely sell a call spread, and that would probably be your safe bet. If you go outside the expected move, and I mean, again, you're only putting up $415 and only making 85 bucks, and that's if Tesla goes down from now until after earnings. So um, definitely not bearish in Tesla. Definitely felt neutral to bullish. And hopefully this helped you guys out. If you want to see more stuff like this, just comment down below. Let me know how I can help, and I will continue to post videos like this. And if they're cool, let me know. Have a great one, y'all. Take care. Be safe. Trade safe. Have fun. Take care.